ETF funds are fleeing, whales are dumping stocks, and fees are cooling down. Is the bull market taking a break or gathering momentum? Bitmine drank 1 million Ethereum in one gulp. And this sip definitely had the momentum of Mutai. All the stablecoin giants have entered the market, and multiple chains are vying for territory. Who will ultimately dominate the payment world? China Merchants Bank invests 1.7 trillion yuan in cryptocurrencies, and the Hong Kong crypto scene looks set to be reshuffled. Freezing stablecoins if they're unstable, locking up tax evasion funds? South Korea's two-pronged financial regulation.
Tuesday, August 19th, BitcoinTV English channel. Where is the coin chain? I'm Michael, starting with the 24-hour cryptocurrency headlines. Yesterday, funds fled the market. Bitcoin spot ETFs lost $121.73 million, and Ethereum saw even greater net outflows of $196.34 million. Signs of this had already emerged last Friday, with Bitcoin losing 14.1 million and Ethereum shedding 59.3 million, snapping a week-long streak of net inflows. However, yesterday's massive capital flight was unstoppable, signaling a weakening of market sentiment at high levels. In the short term, this is a case of cooling down the overheating and diffusing the bubble, with funds flowing in and out at a rapid pace. In the medium and long term, profit-taking is rampant, and the market is under pressure. Want to take off again? First, we need to digest this wave of holdings and rebalance our costs before we have a chance. Should you follow this trend? Look at the whales. The EWR, Economic Whale Index, essentially measures the share of Bitcoin flowing into exchanges held by the top 10 whales. This has been proven in several historical market fluctuations. Whenever the ratio reaches the 0.47 to 0.50 range, a wave of whales likely initiates a sell-off, pushing prices down. The market then oscillates for a while the remaining holdings are absorbed, ultimately igniting a new surge. The ratio has now reached the 0.47 to 0.50 range again, almost exactly coinciding with past bottoming zones. This suggests some short-term selling pressure may persist, but once medium-term funds are reallocated, Bitcoin is likely to generate new upward momentum. Simply put, this is a classic example of short-term volatility, medium-term bullishness. With the whale ratio entering this established range, there may be some short-term pain, but the next wave of Bitcoin's upward momentum is already brewing. The funding rate is a barometer of market sentiment. When it's above zero, bulls are pouring money into the market. When it's below zero, bears are pouring money into the market. From May to August of this year, the funding rate and Bitcoin were practically conjoined twins. From mid-July to early August, the rate soared above 0.01, and Bitcoin also surged to $120,000, leading to excessive excitement. Consequently, risk accumulated rapidly. Now, with Bitcoin at $114,700 and the funding rate down to 0.0040, the market has cooled somewhat, but the bullish trend remains. A short-term size snap could occur at any time, wiping out highly leveraged long positions. However, if the funding rate were to drop further to lows or even negative, it would present a golden opportunity to ambush mid-term positions. Remember the broader trend. Bitcoin remains in an upward trend and its structure remains intact. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within the next 24 hours. Click the bell to join our channel and receive your membership code Monday through Friday. As soon as the Genius Act passed, money began looking for an outlet, and it ended up being dumped into Bitmine. Who could have imagined that the top Ethereum corporate holder would change hands in just 1 month? Bitmine has taken the top spot, holding over 1 million Ethereum, setting a new record. Who's behind this market trend? It's naturally Tom Lee, known as the micro-strategist of Ethereum. HKEX.
I think the 200 to 250,000 for Bitcoin still makes sense because that would still only value it at 25% of the size of the gold market.
Okay.
So I think digital gold means Bitcoin should be worth over $1 million per Bitcoin, and it could happen in the next few years?
Currently, BitMine holds 1,523,373 ETH, worth approximately $6.6 billion, making it the world's largest ETH holder. It also holds 192 Bitcoins. BitMine's average daily trading volume is $6.4 billion, ranking 10th among 5,704 U.S. stocks, surpassing JP Morgan Chase.
BitMine is currently expanding its fundraising efforts and further increasing its existing issuance quota. Meanwhile, the landscape of corporate Ethereum holdings is rapidly reshaping.
As of August this year, 19 listed companies held a total of 2.42 million ETH, about $10.4 billion, accounting for 2.01% of the entire network. The top brother BitMine held 720,000 SharpLink Gaming. The second largest cryptocurrency was far behind. Other smaller players on the list included Coinbase, which ranked third with 36,782 coins, BitDigital, which ranked fourth with 120,306 coins, and BTCS, which ranked fifth with 70,028 coins.
Ethereum has recently been fluctuating between $4,250 and $4,350. It finally reached $4,790, only to immediately reverse course and fall back. The lifeline for both bulls and bears is now $4,200. If it holds, you can still boast of being a bull, but if it falls, the market will have to head towards $4,000. Want another surge? It needs to break through $4,500 and then restrike towards $4,800. The money situation is also quite interesting. Spot ETFs have attracted $12.7 billion this year, with a single-day surge of $1 billion in August. However, there have been some minor losses recently, and the investment strategy is 2 steps forward, 1 step back. The on-chain situation is even more interesting, with gas prices as low as 0.2 guabaway, making transfers virtually free. This is beneficial for application expansion, but unfortunately, the gas price is low, making the deflationary impact a bit less pronounced. In summary, hold on to $4,200 and don't panic. A break above $4,500 will give Ethereum a chance to take off again. Tether, Circle, and Stripe have all taken the plunge, developing their own L1 stablecoins, boasting promises of millisecond confirmations, stable fees, smooth fiat-to-currency conversions, and privacy customization. Each of the 7 most popular L1 stablecoins has its own hype, but the community is experiencing mixed reactions. Supporters say, "Don't worry, liquidity will eventually return to Ethereum," while pessimists lament, "If everyone settles on their own blockchain, won't Ethereum become a mere background piece?" In short, the current situation is that while the giants are enthusiastically preparing their platforms, Ethereum fans are feeling a bit cold.
From Circle SARC to Tether Stable, companies choose to build their own complete L1 and directly use their own stablecoins as gas. The essence is to control the entire stack, reduce external dependence, and not be afraid of being controlled by others in key businesses. With the gradual implementation of U.S. stablecoin regulations, the concerns of companies holding and circulating digital dollars have significantly subsided. Interchain Labs jointly CEO Barry Plunkett bluntly stated that this is the real driving force behind the return of enterprise-level L1.
This also explains why both Stripe and Circle chose to bypass Ethereum and its Layer 2, L2. For CTOs and finance staff at large enterprises, L2 is too complex to grasp, and even explaining it to shareholders can be confusing. In contrast, Layer 1, with its decades of development history, clear logic, and mature architecture, is easily explained to regulators. Many Fortune 500 companies are now considering building their own Layer 1s. With stablecoins as a foundation, clear payment scenarios, and gradually established regulations, enterprise-grade Layer 1 is finally becoming more than just a pipe dream. It's a real possibility that can save money and create real value.
From traditional finance to the frontier of encryption, Chinese banks are the first to do so, with CMB International acting as a vanguard in breaking boundaries. Tax tightening and stablecoin legislation are two fronts of attack. South Korean exchanges may see a stablecoin exodus.
On August 1st, the Hong Kong Monetary Authority, HKMA, officially launched its regulatory framework for stablecoin issuers, complete with a 6-month wind-down period. The stablecoin ordinance is unambiguous. Retail investors who purchase unlicensed fiat-denominated stablecoins are crossing a red line. To prevent further disruption, authorities also released a public license registration system for easy access. While local stablecoin companies suffered minor losses on the day the new regulations were announced, analysts say this represents the kind of healthy weight loss the market deserves. Even more interesting, China Merchants Bank, CMBA, has already sensed the trend and rushed into the crypto market, fearing it would miss out if it slowed down.
Recently, CMB International Securities Company, Limited, a wholly owned subsidiary of China Merchants Bank, officially launched virtual asset trading functionality on its mobile app, marking the official launch of its cryptocurrency exchange. In fact, CMB International received approval from the Hong Kong Securities and Futures Commission as early as July 14th, becoming the first Chinese bank-affiliated securities firm to obtain a virtual asset trading license.
So regarding crypto, I think the biggest question is, can China open their population, their traders to crypto legally in next, let's say, 5 years?
So can they?
2 years ago, if you ask me the question, is absolutely zero. Now, more than 50%. Because the reason is, now we have licensed, regulated crypto exchange in Hong Kong.
This new function of China Merchants Bank is open to qualified investors, providing 24/7 virtual asset trading services, supporting Bitcoin, Ethereum, and Tether. Investors can participate in transactions directly through their virtual asset accounts.
China Merchants Bank is one of China's largest banks, managing over $1.7 trillion in assets. Now, its subsidiary, CMB International, has launched a cryptocurrency exchange, marking the official entry of a traditional financial giant into the crypto market. This move will encourage more established institutions to consider digital assets and provide investors with more investment options. The global crypto market has been heating up in recent years, and competition in Hong Kong has intensified. How CMB International will differentiate itself will be a key focus. The US is busy working on stablecoin legislation, and South Korea certainly doesn't want to be left behind. President Lee Jae-myung vowed during his campaign to formalize the Korean won stablecoin. As a result, lawmakers have been scrambling to come forward. First, the Digital Asset Basic Law, then the Value Stable Digital Asset Issuance and Circulation Law, and finally, the Payment Innovation Law. This dynamic is akin to a legislative back and forth. To put it bluntly, South Korea's current push isn't just about regulating stablecoins, it's also about cracking down on crypto tax evasion.
According to Money Today, South Korea's Financial Services Commission will propose a government bill in October covering the issuance, collateral management, and internal control system requirements for stablecoins. In fact, as early as 2023, the Financial Supervisory Commission of South Korea, relying on the Virtual Asset Committee, began to build a relevant framework with the goal of establishing clearer regulatory rules.
We are working on the stablecoin bill by establishing a dedicated task force. Through extensive discussions, significant progress has been made in solidifying the direction of the legislation.
Separately, yesterday, the tax authorities in Jeju City, the capital of Jeju Province, froze and seized the digital assets of individuals suspected of using cryptocurrency to evade taxes. The operation targeted nearly 3,000 taxpayers, who owed a total of approximately $14.2 million in unpaid taxes. Authorities are currently identifying assets that can be seized to settle their debts.
The South Korean tax agency has announced that it will tighten its enforcement of tax arrears, warning against exploiting loopholes with cryptocurrency. Meanwhile, the stablecoin market is a major development. The global market capitalization of stablecoins currently stands at $266.7 billion, of which $266.3 billion, or 99.8%, is denominated in US dollars, effectively dominating the market. South Korea plans to legislate to codify the issuance and collateralization regulations. This will not only stabilize the market, but also mitigate potential complications and, more importantly, prevent the market from being locked into the US dollar stablecoin market. Several major banks are currently busy researching Korean won stablecoins, preparing to enter the market and seize the opportunity.
Challenge to a mining farm. Retail investors strike back. A miner mines valuable blocks with a little overlord 37 with Bitcoin worth tens of thousands of dollars. Mining pool owners are collectively questioning their lives. Huobi HKEX, the market is going crazy, with daily transactions accounting for 22%. Justin Sun said with a smile. The bull market is coming, and people are rushing to buy air coins. A slick move +1, strategy updates financing terms, and the stock price falls to Bitcoin Holdings 2.5 issuing additional shares at a multiple of the original price? The leaks exclaimed. This wave is in the atmosphere. Uncle Hat is back for a makeup lesson. Renmin University of China Law School will hold an advanced training course from August 29th to 31st. Courses will include practical skills such as how to elegantly confiscate BTC, and a guide to preventing stablecoins from running away. French people play with coins. French-listed company Kitano disclosed that its wholly owned subsidiary SOL Treasury Corp bought another 1565, total holdings 1.410,000 pieces, the boss said. It's much cheaper than buying red wine.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.